Hi, and welcome to this week's market update. Well, it's been a very interesting week. We started off with a very positive day Monday following the US market's very positive lead Friday night ahead of their 4th of July holiday. And then we've seen our market drift a little bit, mainly due to resources having a pretty negative day yesterday, with BHP and Rio both down over 5%. We are seeing a little bit of a bounce in resources today as iron ore has improved, and generally our market's up about 20 points today. So the stocks that we're watching this week, the first one is the banking sector. Now, banks have had a really negative couple of weeks, mainly due to concerns in the property market. From what I'm looking at, it looks like the market's pricing a fall of around 20% to real estate prices across the country, and obviously some defaults from that through the mortgage market. When we take a deeper dive into it and we look at the numbers for June, the real facts are out there that the property sector only fell 0.8 nationwide. So really not a big fall when you compare to the 20% the market is pricing in. But the bank share prices have fallen sometimes 10 or 15% from where they were pre-June. Again, we also saw this month an increase in rates from the RBA, another 0.5%, and that also has got the market a little bit nervous on property. But when you look through the mortgage books of our major banks, we're certainly not seeing default numbers increase at all. In fact, we're seeing around 2% across the major banks of current arrears, which means about 98% of people are either in line or in front of where their mortgages should be. So not an overly negative picture when you delve into those sort of numbers. Looking across the banking sector, currently our preferred bank is ANZ, followed by National Bank Westpac, and finally CBA. On CBA, we currently feel the premium it's trading at, which has always been in the price of CBA versus the other three majors, is starting to look a little bit high. In fact, when we run the numbers on CBA, we can see that if you sold CBA and bought the same dollar value of each of the three other major banks, you'd actually improve your yield from a 4.5% return to 6.2%, which to me looks very attractive when CBA is trading at such a premium to its peers. Another stock we're looking at present is Telstra, which currently only yields around 2.8%. And when you look through the stock, it really doesn't have any new major projects that look to lift its growth numbers. So we're considering selling Telstra, which I know has been a stock that many people have held for a long time, but with these low yields and really lack of growth, we feel there's a lot of better opportunities out there in the market. One sector obviously would be considering the banks, or looking at our major resource companies, which are all yielding at least 7 or 8% on current numbers. Thanks for listening this week.